Let's take a look at some charts, figures, and graphs on Balancer for Brave New Coin. So Balancer, the platform, is many things. It's an AMM, it is a non-traditional AMM, it is a non-custodial portfolio management tool, it's a liquidity provider. All this is on ETH, of course, and by non-traditional AMM, what I'm referring to is, instead of the classic 50-50 model, you can essentially create a portfolio of anything you want, and users can choose to add liquidity or not. There are different types of pools with different parameters on who can add what as far as liquidity is concerned. The Balancer token is more related to governance, and that's going to continually be distributed over the next 8 to 9 years. The fully diluted value is currently around 5.6 billion market cap. So there's a lot of interesting moving parts here. It's early days for stuff like this. Another thing is how the fees work. From my understanding, the fees are collected from the traders, leaning back to that AMM type model. It's closer to an ETP type thing, inverse ETF. I mean, it's got a lot of moving parts here. You can dive deeply on all this. The biggest thing is Balancer version 2 is coming within the next week or days. I believe it was end of March was their targeted launch. Really the biggest thing for all of this ultimately is gas efficiency. If there's a project on planet Earth that's in DeFi, not focused on gas efficiency, they're doing it wrong. I'm glad they have all this new stuff coming, but this is really what it boils down to if you want the project to succeed, because unless you're moving to layer 2, introducing some sort of gas efficiencies, you're just going to price yourself out by pricing most people out. So obviously I'd encourage you to read this post if you are curious as far as what those changes will be and how they will be enacted. But again, the biggest thing is the gas. Gas costs are absolutely insane right now and have been insane. So it's good to see them addressing that. If we look at TVL, USD TVL, basically an all-time high, which may be an indicator of the market pricing in that version 2 upgrade. So long as TVL continues to increase, it's hard not to be bullish on the platform and project. The token may be separate from that, but it's certainly worth consideration if you see TVL increasing. TVL is kind of like this tribal thing where if people, it's like locusts on a wheat field. You know, if they see fresh wheat ready to be taken from the husk, then the locusts will show up, TVL will increase, farming increases, that sort of thing. All this stuff goes hand in hand. If you look at the transaction counts for the token, have been really abysmal. You know, since the launch, there isn't a lot to do with the token, which is my guess, and or you don't really need a reason to move it around frequently. So overall, transaction per day stats have just been kind of flatlined since the initial release of the token. Average transaction values continue to increase to all-time highs, probably as a function of the large increases in price we're seeing. So collectively not bearish, but obviously if you're seeing increases in the token on-chain activity, you're going to see increases in price. And these DeFi tokens are slightly different in that you don't really need to move the token around too often. But when you see these increases in on-chain stats, it's most likely related to speculation more than anything. If you look at NVT in the line here, inverse metric of economic utility, and active addresses in the fill here. Active addresses since October have been slightly rising. Again, nothing you'd write home to ma about, as they say. No real big increases here. You're not seeing just like, new paradigm type increases, just slow and steady active address increases since October. NVT continues to fall, which is bullish for price or suggests a bullish outlook, as the on-chain activity has not been priced into the market cap adequately. That's what NVT is suggesting here. Now there's all sorts of caveats with pre-mined tokens and liquidity mined tokens, because all that is factored into this, which may be falsely bringing NVT down. But just comparing it to itself, where it was and where it is now, it's clearly more bullish now, even if NVT is a flawed metric for Balancer, than it was previously throughout 2020. If we look at technicals, 5200, monthly pivots, VPVR, RSI. So we did hit a new all-time high for Balancer USD a few days ago. This is the 6 hour, not a lot of data for Balancer, so you can't really zoom way out. But previously it had a head and shoulders that broke down, inverted head and shoulders with a 5200 bull cross, along with everything else that broke up in January. So it's very clearly in the DeFi sector, DeFi category. I think that's pretty obvious and indisputable. And it's good to see DeFi things moving together. You know, if a sector is bullish, everything in the sector should move. We tested the 200 on the 6 hour, and it printed this inverted head and shoulders, and it was probably one of the better reactions to this inverted head and shoulders across all of DeFi. Even ETH, this outperformed ETH even over the past few days since March. So trend still looks good. Upside resistance, I like 75, I like 90, I like 100, I like 110. You know, any of these monthly pivots, at this point, people are probably thinking 3 figures, you know, $100 Balancer. I mean, I've said that with all the tokens. Any 2x logical, psychological resistance support makes sense to me. Not a lot of volume support until 20, you know, the previous all-time highs, basically what people are going to be watching, just as they did on this low. It's no secret that there's a little bit of a volume there. So between 31, 37 would be a good dip buy should this remain bullish on any downturn. But it's very likely this just keeps going, especially with the Balancer version 2 stuff waiting in the wings here. On the cloud, again, since January, everything's been just bullish, bullish, bullish. It had several TK cross recrosses, just several impulse bullish moves as expected. And when it broke out of the cloud again in March on the 6 hour, it had another bull run to all-time high. So this is all telling me this time frame makes sense. These settings for the cloud make sense. And it's worth watching the 6 hour going forward for long, short, neutral entry signals in the future. Right now it looks bullish still. It's above the Kijun. The Kijun's at like 55-ish. And it's definitely a better long entry here. You had not only a chart pattern, but the bullish Kumo breakout, just as you did here, bullish Kumo breakout, TK cross recross. So you're probably waiting for a TK cross recross here to the bull side, or you're just waiting for everything to reset again like you did here. It's a bit of a middle of the road long entry at this point in time, even though it is above all-time highs. You know, previous all-time highs, it's sitting above this $50 level, which is another psychological support that people are probably watching. So it's got a lot of good things going on for it. Balancer BTC, this is the daily, so I did zoom way out for this one. We're just starting to get the 200-day moving average print here, and it's important because, hey, look where price got crushed exactly at the 200-day moving average. Got crushed at the monthly pivot. I'm also watching the possibility of this macro inverted head and shoulders monstrosity with some sort of neckline between 10,000 sats and 11,000 sats. You know, it's probably going to get messy here at the 200-day moving average. But I think all in all, this holds a bullish bias against BTC. No bear div yet, but it does look good for up. And you can see previously the mess of the head and shoulders that this was ended up breaking down, sort of acting as expected. So to me, as messy as this is, this inverted head and shoulders, it still looks better than this head and shoulders did. So I do like it against BTC here. It does look good for up. If you want to be patient, you're waiting for a break above the 200 to break above the monthly pivot. Otherwise, you're just buying all the dips here down to 7,800, basically where the big volume support is. Big volume support at 9,000 sats as well. So lots of support still sitting on the downside here. As far as upside, probably any of these VPVR levels, any of these monthly pivots, any of the horizontal breakdown points previously, all that makes sense as far as resistance on the way up. So I wouldn't expect an all-time high retest anytime soon, but I do like bullish vibes there on Balancer BTC. On the BAL ETH pair, we're also seeing this inverted head and shoulders type price action with price actually above the 200-day moving average. So it's outperforming ETH, or has outperformed ETH since March to a significant degree, I'd say. And at this point, I'd be looking for support at the neckline, the neckline of the head and shoulders at like 028, 030, something like that, as far as a continuation sign, a long continuation signal. And it should want to retest these horizontal supports that have turned into resistances on the way up. So it looks good on USD pair, it looks good on ETH pair, it looks good on BTC pair. They've got version 2 coming On-chain stuff looks, iffy, doesn't look great, but with all these governance tokens, it's probably not going to look great until something happens dramatically on the governance side where people actually need to move this stuff around to vote or whatever, however that works in the back end for these various tokens. And really the TVL, again, all this stuff is sort of hand in hand. TVL, price against BTC, price against USD. I mean, it helped against ETH. It helps that BTC and ETH have done a bunch of nothing, and Balancer's kind of been a decent mover against both of them throughout March. And lastly, check us out on Enzyme.finance. We will have a DeFi portfolio launching probably by the end of the month, the last I've heard from my compadres at Techemy. I will be part of the team clicking those buttons for the portfolio management as well. And again, you can check out all of the trades I make on here. The AUM, it's all transparent. It's all non-custodial portfolio management tools. So let me know what you think about Balancer in the comments below. Is it too confusing for the average user? Is it sort of intermediary, grown-up type users flocking to this sort of thing? Because I think for most newer people, it's going to scare them away unless some of this stuff is simplified to a greater degree than it is now. And that's with most DeFi stuff, but especially Balancer. And there are ways you can certainly simplify this from a newer user perspective than going straight into Balancer, but just something to consider as well. Happy trading.